Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over what is happening to the stock, what we can expect moving forward, and all that good stuff. So ladies and gentlemen, as per usual, if you enjoyed, please don't forget to hit that like button. This is not financial advice, and I am not a financial advisor. And of course, if you do enjoy my technical analysis, my thoughts on the charts, etc., well, I do share my thoughts every single day the market is open, so definitely check it out. And yeah, for $3 a month, I share my thoughts on Tesla stocks, sometimes other stocks, every single day in my YouTube membership as the market is open and trading. So definitely check it out for $3 a month. The link is down below. It is the first link in the description. Or for $5 a month, you get everything that I just mentioned in the first tier, plus NVIDIA daily updates in there as well as the market is trading constantly. So nonetheless, jumping into a Tesla with an absolutely wild day today. I had to actually re-record this video because Tesla was initially down after earnings, and then it rocketed back up as I went AFK for a bit. Yeah, it's not expected. I'll be completely honest. Some very wild price action, but nonetheless, it was down, unfortunately, still about 2.2% on the day, closing at $389 per share. Now, the earnings did come out, and the earnings was actually a miss. Overall, it was definitely a miss. It was actually down closer to 4% on the day. It dropped to about pretty close to my target I actually mentioned. It dropped about, I think it was closer to like almost 6% on the day at the very lowest point. Which was about, I think 365 was the lowest it dropped, if I'm not mistaken. Let's go back here quickly and check. Yeah, about 365, right? Which is pretty close to that level I've been talking about, right? Now, I obviously didn't get in anything because, you know, I honestly thought it would go lower. I'll be honest. This is, I would argue this is a miraculous recovery. But it did come right down to that level and then actually came back in, not only retesting this general vicinity I mentioned, but it actually came back into the bear flag, or what would have been a pretty ugly looking bear flag validation, which could have definitely got pretty ugly. Now, again, we'll see how the earnings call goes, right? We shouldn't jump to conclusions just yet, especially when it's clearly moving up and down so wildly. But so far, not that bad, right? Not that bad. So what does this ultimately mean for the stock? Well, so the overall perspective is this, right? So again, like I said before, there's still technically two scenarios that we're in that are almost contradicting of each other, right? We have this nice, obviously massive run up into a bull flag breakout, arguably retesting it right now, arguably retested it in the after hours. And then, you know, you rock it up, right? You rock it back up to about 440, maybe even a retest of all-time highs. That's my main two targets. So the upside, right? That's the main target now, or the bullish, I guess, perspective. The bearish perspective is, unfortunately, you know, you had this massive fall and then you essentially created this bear flag. And now, you know, we were essentially on the verge, if Tesla essentially maintained below the 380s after hours on that earnings miss, we were on the verge of actually playing out this bear flag. This actually could have been, you know, not amazing, right? Definitely not amazing. This could have been very questionable if it did maintain down below. Now, like I said, I don't want to jump to conclusions just yet because the stock is clearly quite volatile in the after hours, right? If you go over here, you can see, you know, it is pretty volatile, right? Very, very volatile in the after hours, right? It, again, it went all the way down and then went all the way back up. Like it went down 6%. And then if you bottomed the dip, you're already up 11%, which is hilarious. But it is like that sometimes, right? The earnings call is usually really where things get interesting, right? For better or for worse. So the way I look at it moving forward is this, right? I definitely want to see how it reacts to earnings call, and I want to see how it opens tomorrow. But if it somehow manages to still open down below, really anywhere in the 380s, like 385, even below 380, like anything around that level or lower, I think that's very, very bearish. And I think at the very least, we'll come down to 350. Worst case scenario, we come down to $280 to $300 per share. Now, if it does maintain this kind of price action, and it does essentially maintain staying ideally above about very high 380s to about $390 really, to make it simple, per share, and it doesn't drop below that and ultimately maintains above that and opens up above that as well, that's actually really bullish. Well, okay, maybe not really bullish, but it's good. It's very, very good because, you know, we would still be technically in this bear flag and we could still easily get that move back up to about 440 or so, right, which would be that top of the bear flag. But if we break above 440, we actually essentially nullify this bear flag, and then this bull flag pretty much becomes the only valid pattern, in which case we should ultimately see a pretty decent move back up to the upside ultimately and overall. So let's see how it actually plays out. Again, I don't want to jump to conclusions with an earnings call in Elon. You really just never know sometimes, right? It is still a massive question mark, and that arguably can be bigger of a reaction than what we've seen so far to the actual earnings report. So let's see. That's obviously in about an hour from now. But again, my target to the upside remains about $440 per share is my main target. Breaking above 440 to ideally even above like 450 roughly, I think would be extra bullish, and we should rocket up even higher. At the very least to retest all-time highs. But then this bull flag really comes into play, and we could actually play out this very large bull flag, which will most likely take us well into the 500s. That's the very bullish scenario. The bearish scenario is, well, again, something happens during earnings call. We actually closed down below, well below 390, essentially below mid to low 380s especially. And then we ultimately play out this in a more bearish fashion, and we have these two targets down here being about 350 roughly to as low as about $300 to $280 per share, right? So let's see how it reacts ultimately. Let's see how the stock gets digested essentially moving forward. But those are my main targets. They remain my main targets, and that's essentially how I'm still looking at it. Now, the more kind of neutral to bearish perspective is we still get that bounce to 340, and in the bullish perspective, like I said, the bulls really want to break above about $340 per share. Why? Because this is still technically within bear flag territory. Like in theory, we could still technically bounce back to 340 and then reject really hard and then break from the bull flag and then make our way ultimately much lower. That unfortunately is still a reality until this bear flag is essentially nullified. So that's kind of the more neutral to bearish perspective. Then I give you the overall bearish perspective and I give you the overall bullish perspective, right? So again, let's just see how the stock reacts. Let's see how earnings goes. Let's see how all this gets digested as per usual. And yeah, no reason to look into options flow too much here. Most of these option flows are probably, especially if they're short dated, are probably not doing very well. I think the implied move was like at least 6%, might have been even closer to 8%. And with the way Tesla's moving, you probably lose in both directions right now. It doesn't even matter. As long as it stays something like this, it doesn't matter if you got puts or calls, you probably lost overall because of, IV crush essentially. So I don't think it matters too much. Now, the one thing that I'm still, again, the one thing that makes me still a little bit on the more hesitant side, and, we'll see how the stock digests overall, is again, the mean reversion strat, where again, I personally like to buy a stock when it reverts back to the mean. Now, like I said many times, it doesn't necessarily have to come back to it. It could, right? We also could still ultimately just go fairly sideways. Like we could still have this very large weekly contraction potentially that can still last for quite some time, and we essentially let that reversion catch up back to us, and then we get ready to blast off. That is also a possibility. So let's just see how it goes. But what I'm trying to say is, again, unless it really just rockets and it really just blasts well past 440, I don't see this going anywhere too high just yet. Again, unless we break 440 and really start closing back above 440, because I still view us as a little too far away from the mean reversion to the price of the stock rather. And I definitely want to see that. Again, either we come to it or it comes to us or we meet somewhere in the middle. I don't care which one happens, doesn't matter to me. But I think once that actually happens, and we do essentially maybe even do this kind of sideways movement like this and get very tight on the weekly, which is a possibility here, and this finally comes up and catches up to us, then I think we get ready for that next true move to the upside, which, honestly can take still some time. And again, this is a weekly chart. There is a chance Tesla ultimately goes fairly sideways between 440 all the way down to about 380. There's a chance that we just bounce up and down between 380 and 440 for the few weeks to come. Like that is a very realistic possibility still that you shouldn't fully ignore in my opinion. So let's see how it plays out, right? Let's see how it ultimately plays out. Let's see what ends up coming to fruition and how this ultimately ends up getting digested, especially with the earnings call coming up, right? So here, I'm going to draw it out just in case, right? Just so it's a little more clear, right? It looks kind of like this, right? So this could take arguably all the way up until mid to late February. This can easily take into mid to late February as we continue getting tighter and tighter and tighter. But I think that's all I got for you, right? I don't think there's too much more to add. So let's see how this actually goes. Let's see how the earnings call goes. And yeah, thank you so much for watching. I'll see you tomorrow. Peace.